Welcome to my channel. Before we proceed, please read this disclaimer. Thank you. So let's dive into NASDAQ. I want to tell you how I analyze this NASDAQ. You don't necessarily need to trade individual stocks. Trading technology stocks like NASDAQ, maybe you want to trade something like QQQ, is already very good, or SPY is already very good. It will not give you a lot of stress, because when you are trading individual stocks, sometimes you need to do some analysis, which if you don't want to do that, or you don't have the knowledge of it, I will advise you to just trade NASDAQ in the form of QQQ. You can actually trade the TQQQ. I can show you like the TQQQ, that is the triple QQQ. You can actually trade it just in and out if you want, stuff like that. UPRO, all this you can actually trade. So let's go back to our NASDAQ. So here on NASDAQ, how do I know where I am? You have to first of all know where you are in the market to know where you are going. If you don't know where you are, it's going to be difficult for you to know where you are going. And I'm going to tell you how to know where you are in the market. It will help you to be at the right side of the market all the time. Let's start from here. Now, where we are at the moment, you can see the market started from here. Let me get this. You see, from here, the market started from here to start going up. What do I look out for to know where I am in the market? Whenever we are on the first level of the market, in fact the first and second level, they are the most trusted levels. Level 3, 4 and 5, those ones you should be very careful, but I also tell you how to be very careful on trading them. So how do I know that the market have reset? For example, a lot of people are saying, oh, the market is going to crash, it's going to, all those things. Yeah, when you look at this MACD here, you can see this volume. You see this volume, the way it kind of grew strong volume that pushed this from this oversold region up until this this oversold region up until this overbought region that we are now. So this is just level 1, or the first move of the weekly chart, which we will be expecting that will come down to this 50 RSI to continue up again on the level 2. Let's go back to the previous moves to see what I'm trying to explain to you so you can understand it better. You look at here, let me take away this. In 2022, when the market started to correct, you see we broke this 20-week moving average, and then we stayed to respect this 20-week moving average, and also here we broke 50-week moving average. So before you actually think of getting back into the market, you want to make sure that the price have come above this 50, because after breaking this 20, what you expect is The market, whenever it goes down, it comes down to it, respect it, and continue down. When it came here, it broke it, but there is another obstacle here, 50-week moving average, which is this white line. And then coming towards there, it starts moving down again. The market always moves in twos. When it breaks here, come down, it tests it, then it drops. So for people that want to buy at the bottom, they can just get the market here, hoping to sell whenever the market is coming towards this 50 RSI or towards this 20 to be on the safe side. You don't want to wait or it breaks it above. No. Just when it gets here, you want to like out of the market because you are on the downtrend. But for me, I like to wait for the market to turn up. How do I mean? I want to wait as this is broken here. I want to make sure that we also break above it, come down to it to test, and hold. After breaking down, we go down, come above that same place that we broke. After coming above it, we retrace back and hold on a strong volume. So what happened here is this. You see the market went down and consolidated around here. This RSI is very important for me because it means a lot in market analysis. It tells me about the strength of the market. Let me show you what I mean. From here from this side down here, for example, you go down from here. This is the down when the market moved down. Here is the accumulation, and then it also moved up here. Same here, the market came down here, we start to accumulate here, and then we broke above this 50 RSI, and then we came to that same 50 RSI here to respect, which is here. We now respected it on a strong volume. When we see this, we are expecting the market to start turning up, and I will start buying when this has closed above the 7-day moving average on the daily chart, or the 7-week moving average on the weekly chart, which is this yellow line. Then closing above it, because we have held here, has given me the confidence, and I will start buying. My exit will be whenever we break, because we have to come to this oversold region, and whenever we break this 7-week moving average, which is here, I will be out. This is on my long-term portfolio. And whenever we break it and they start coming down, I am also waiting for it to hold on this weekly. Ideally, I will buy here on this weekly. Yes, I will buy here because we are entering level 2. I will buy here on this weekly, and I will not sell even when the market starts going against me. What I will now want to do is to leverage down to also buy, add to my position when it's going. I know a lot of people will say, no, when the market is going against you, jump out. This is NASDAQ. Okay, this is NASDAQ. It's not an individual stock. If it's an individual stock, I will jump out immediately. Once I enter here and it fails, like here, I am out. But this is NASDAQ. It will not go bankrupt. Okay, and for the past 100 years, we can see that the NASDAQ has averaged, in fact, it has been given, SPY has been given 10% return per year. Not necessarily 10% return. Sometimes it gives 5, sometimes negative, sometimes 22, but on average it's about 10%. So I'm not going to jump out. What I will do is, if I buy here, because I know where I am in the market, that's what I'm saying. Understanding where you are in the market will give you the confidence in whatever thing you are doing. Not when you are doing it on an individual stock, okay? And you cannot use individual stock to know where you are in the market. Rather, you will use the general market to know where you are in the market. Individual stocks always have news that affects them, same as this bigger market, but this is where you can be able to know where you are in the market. So when we start dropping again, continue to drop, what I'm going to look for is to add more. So I'll allow it since we have respected on this weekly 20 moving average and it goes by breaking it. So my target will be on the weekly 50 week moving average. So on coming there again on the weekly, it will now hold, and once this also break and break this my 7 weekly moving average, you see this one, let me use this for you to see this particular move, yeah, on breaking it I'll also buy, and I'm going to stay on it until now. I'll show you how I will stay on it. You see this moving average on this week is now above this 50 RSI. I'm going to stay on this until this 50 RSI gets broken, or this 7 week moving average, which is this yellow line, gets broken. That's when I'm going to come out. So I'm going to stay there, and then the market will keep going. So on here, whichever that one that comes first. But sometimes I start to take some profit actually whenever we are going up. I'll start to like take some profit off whenever I start to see that we are now stalling, especially when we make 1 and 2, not going above. You see this RSI is not going above. Kind of it came here, this one also stalled here, and then this one started to like not getting to that point. I know that the market is approaching weakness because we have already reached this oversold region, which is also from there this one dropped. So I'll start to take some profit. Now when it drops back to here, I can start buying again. Once I see this, I'll start buying again. On coming here again, getting to that same point, you see here we actually broke above it, and then now and nothing happens here. When we break above this oversold region and break down again, like you see on this, we already went above and then came below, which also broke here. I will start coming out and coming down to, now you can see we have gone level 1, level 2, level 3. So I will start being a bit cautious. I don't want to be going much into the market now, because the correction that will come will be deeper, because the level 1 and level 2 is always the best. Then level 3, the market have already started getting exhausted. The people who are coming in are the late comers. This is on the weekly chart. So coming down here to this weekly, we held, but you can see we are far from this 7-day weekly moving average. But I actually will also enter here as we held. I'm going to enter, and then I will now be cautious, but I'm going to enter on a very small proportion, maybe just very little shares. I won't buy a lot, because we have already exhausted the best levels, and then I will now start watching to see when I'm going to come out finally. Here also it broke. Now you can see that before, all this came to hit this oversold region, but you can see what is happening here. This one broke here even without hitting this oversold region. That means the market is actually getting weak. As soon as we break here now, I'm coming out. Now can you see something? When we get to this 50-week moving average, it didn't act like this. Before, you will see the buyers will come in, or on the 20 weekly moving average, you also see the buyers coming in, but here no. So you see it start going down. The buyers didn't come in, and remember the market goes in twos. It breaks this, come here, test, and then drop down, and then hitting here. Now remember we have broken this 20 and this 50. I'm going to wait for the market to come above this 20 and this 50 before I'm going to get in and then test it back. So we have come above this 20 after breaking it. We came above this 20 week moving average and above this 50 week moving average. The market here on this RSI have also came back to the bullish side. Above 50 is the bullish RSI, below 50 is the weak RSI, which is the oversold is the bearish RSI. So now we have came above that and down we held, and this came, you see, we came with a strong momentum. Then I will start buying again. So now we have entered the level 1 again here, and this level 1, I'm expecting the volume on this MACD to get stronger. So now we are on the level 1. So this is all level 1. So when we drop back again to this 20 weekly moving average and then see a momentum that will hold there, I will enter. Even if it breaks it, I won't sell, but I will add up when we come to this weekly moving average, which is the white one, 50 weekly 50 MA, 50 moving average, 50 weekly moving average. I'll also re-enter there again to add more to my portfolio. So that is how I analyze my Nasdaq when it comes to where I am in the market. So now I can tell you that we are on the weekly level 1. So we can pull back and then still move something that will be like times like 1 or times 1.5 of this move. That means we're going to get 100% of this move or 150% of this move up after retracing back and continuing up. So that is what I want to catch. So when you hear that people doubles their account, this is what they normally do. Those people that understand the market, this is what they actually do. You can use this to actually check back to see how those ones work. So you can always see that the level 1 is always with a strong volume on this MACD, and you can also see the volume going up here. Whenever you look at this MACD, you can see the volume and how it moves from here, comes up here, then retraces back here, and then you can see a strong momentum came back, and then we started on level 2, hitting on the oversold, came back, held, and then on this RSI, this area 50, also we now experience this momentum enter, but although it's not that strong, but this is on the level 3. You can't expect what we found on level 1, level 2 to be on level 3, and then it continues. So whenever you are on this and you are watching out, always make sure that once you break this 20 moving average, 20 week moving average, you are coming out. Like here, let me remove this. Like here, once you break this 20 moving average and you are breaking, going down, you see this weekly here, RSI 50 has been broken. You should be out. Don't be there anymore. The market is now going to correction because you can see here has been respected, here has been respected, and then you have already gone from your level 1 up here, and then you have gone your level 2, now you consolidate, and you have gone your level 3, and also level 4 is already weak. You're already in the weak market. You see, it couldn't even go far above the breakout and then started to turn down. So this is just the way you analyze it. So you don't actually need to always be in and out of the market. You can know when to enter the market and when to leave the market. You can have other jobs that you are doing. You don't necessarily need to be jumping in and out of the market. The people who jumps in and out of the market always get caught and they always lose money. And that is why most day traders lose money. Whereas the people who invest in long term actually make money. They know where they are, they know when to get in, and they don't bother the market. They allow the market to do whatever it wants to do, go up and down within that same space, which is within this space of this weekly bullish RSI area zone. Let's go to the for people who wants to go in and out trading it on the daily. Let me show you what they will do. let's use this one here. So how I trade this on this daily is, when we start to move, whenever you are coming down to this area, let me make it, whenever you are coming down to this, you are 50, you want to also, this is on the daily, right? You want it to also come above, and then you buy. When it gets to your oversold region, but if you are doing this, you have to be very careful, because most times you'll be always be getting caught up. By the time you are in, you are out, you are in, you are out, you kind of having your money always split. But this from here, let me take out this one and use let me use rectangle. This is the last move of the market, which is always, let me take out this one, which is always that level 4. You can actually notice it on your daily. On your daily, you will notice that the move is no longer that smooth. It's always breaking below this 20 moving average, coming below it. When you are in level 1, level 2, it's always respecting this 20 moving average. Let's bring this rectangle back to the weekly, so you can see where we are on that weekly. You can see it was on the last move here before this drop. That is on the last move here, not on this our first move or second move or third move, but on the last move. If you come to the first, second, and third, you will see that they always respect that 20 moving average. You can see they always respect that 20 moving average. Whenever it breaks it, that means it's correcting, and that is when it's coming down to the weekly 50 RSI. I will show you here. I will color it let's say blue, so that you can be able to see it. So if we go to our weekly now, you will see how this came down to the 50 RSI. This particular one came down to the 50 RSI. You see here, it's the 50 RSI, this weekly. That is, it dropped to the 50 RSI and then start moving up. So before it drops down, some people want to sell here and sell at this top and get back down here when it comes to 50 moving RSI. Okay, so how do you do that? You can actually do the same. Whenever it breaks on your 20-day moving average, you can be out. Whenever it breaks on your 20-day moving average. Then you can go down to your weekly 50 RSI to buy back. But there is one thing I want you to know and notice. Come to this RSI. Whenever it breaks and it's coming down to the 50, you want to know when it is complete. That's how to know. We break first this 50 RSI. We break it down, and here let me zoom it in and take away this. So what we do is, when we break this 20, that is this purple line, when we break it, we need to come back to it and then complete the move. How do you also see it on your RSI? You break from this RSI, you come back. Whenever you are coming back to that same spot, you will see it here. You see, you come here and then make the final move down. This is the final move down. Then it will start moving up again. So you have to look out for this. It goes, come back to it, and then go down. That is where, if you check it, it's directly on your 50 week RSI, and that is when you have completed this move. You have completed your downside. You can now start to go in. So I will make this. I will stop this. It's been almost 25 minutes. So I wish you success as you continue with your analysis. I hope the knowledge I pass to you from here, you can add it to whatsoever you have to make better investment decision. Thank you.